everyone, and welcome back to my final morning report analysis video on Monday 20th of February with me, Rich Perry, market analyst at Hantec Markets. Let's look at gold. And we sort of just come off the top a little bit on Friday, a little bit of a corrective candle, nothing too significant yet, but you look at the momentum indicators, they're all still fairly positively set up. I'm still sort of thinking that the market is more likely to break through the upside of the resistance and break through 1244 now, more likely than it is to sort of break to the downside, I think, at the moment. So especially given the setup on the momentum indicators, Friday's candle just sort of muddies the waters a little bit, giving you a little bit of a corrective move back below 1236, 1235. So it sort of gives you that sort of near-term sort of trading range-esque type setup. Momentum indicator on the hourly, very neutral, again buzzing between 30 and 70. Again, that's sort of fairly range bound. MACD lines sort of have started to turn up again, and stochastics are rising. So you'd sort of say you're sort of still a positive bias within this range. And if you can see the oil gold price pulling back above 1236 again, I think that would be again positive bias towards 1244, 1244.70, which is ultimately the resistance, and that is still in place. And Friday's high was 1243.80, so there is clearly resistance around that sort of level that the market needs to break through, and I do think it has relatively positive, certainly positive hallmarks within the course of the last sort of 2 months, really, with this recovery that we've seen, but generally nearer term as well, positive hallmarks as well. So I'm sort of pointing my analysis towards thinking that this is going to be an upside break eventually, but just had a little bit of a pause for breath. But still, the gold price is holding up very well despite the perception of dollar strength as well. So I wish you good luck in your trading today, and I will speak to you again tomorrow. Thank you.